Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Congratulations to Miss Philippine and commiserations to Miss Colombia. Poor Steve Harvey. Poor Steve Harvey. Let's get down to the serious business of investing as we go past that faux pas. Interest rates in the U.S. Interest rates in the U.S. have risen, the policy rate that is, by 1/4%. And it has been telegraphed by the US Fed, the equivalent of its central bank, that interest rates will continue to rise for 2016, and some posit by about 1%, and further that it might happen in 1/4% tranches up for 1/4% tranches. Whether this is realistic or not, we wait to see based on economic data and the decisions that will be taken going forward by the Fed. What does this mean for you? It sounds 1/4%, sounds small, but in the context that the US is the largest market and economy in the world, it's very significant. And essentially, the question of an interest rate rise impacts you as an investor and also you as a consumer. For you as an investor, let's look at what's happening. First of all, let's take the first graph. And what you would see is that the increase in interest rates would impact what is happening to the yields that you can get on the bonds that you would acquire in the market. But if you already have those bonds, what will happen is that your valuation will actually fall. So whether you are a new entry player or whether you are already holding bonds, as I said, look at that first graph that shows you in high yield bonds versus what we call investment grade bonds, how the market has clipped up towards the right hand side of your screen. And what it means for you is if you already hold, as I said, your valuation, the value of your bond goes down. And if you are there at the cusp of considering entering and investing in medium term bonds, you have a better entry point. Let's go now to the question of TT versus US dollar rates. I've said before that if you buy a bond in US dollars, that is if you had US dollars, and you bought that bond, inflation in US dollar terms is about 1.3%. And if you go, for example, to a Petrotrin bond, the 2019-2020, it's about 6.8%. So when you factor out inflation, you would be getting a real positive return, all other things being equal, of about 5.5%. In the Trinidad and Tobago context, if you look at a Trinidad and Tobago bond, what you are getting is in the 10-year yield, 3.9% on TT dollar. Consider Petrotrin covered by and backed by the government of Trinidad and Tobago, getting 6.8%, even though its standalone rating is lower, backed by the government of Trinidad and Tobago, as investors look at it. But if you look at a Trinidad and Tobago bond, TT dollars, the pricing for it, or the yield on it, is 3.9%, but inflation at last count was 3.2%. So your real rate of return, if you just do a simple subtraction of 3.9 minus 3.2, you would get 0.7%. So you can compare both of those and see why we have been saying that you need to diversify your holding by currency as well, where you can get better returns by being in other markets and in other asset classes, bonds we talk about. What's there for you as an investor to consider? Well, if you are considering entry into this market for bonds and so on, you would have to consider the volatility. That is, what will be the kinds of movements in pricing and valuation of these investments, because that affects you. Value goes down, your wealth is diminished. Value goes up, it's the other way. But with an increasing interest rate environment, the corollary is that valuations ought to go down, all other things being equal. So that's why we also say, think about a buy and hold to maturity strategy. What happens in between will be of less concern to you than I put so much today and I expect that I must get this upon maturity of the bond, whether it is 5 or 7 years. And we've been saying that you can get 5% plus on US dollar bonds in the current environment, and we expect that to continue as you go along, at least for the very short term. Consider those investments because you can plan better if you have a buy and hold strategy. You have a clear fix on what it is you are going to get in terms of what your cash flows are, the coupons, as well as what is happening at maturity. We talked about, let's go to our second graph because we were talking about inflation and we were talking about other things. If you look at that gold line at the top, inflation 3.2%. If you look at the Trinidad and Tobago 10-year government yield, 3.9%. And if you look at inflation in the US inflation, 1.3%, that blue line. And if you look, for example, at the Petrotrin bond, 2019-2020, I believe it is 6.8% versus that inflation. That tells you the story of what it is you're looking for. A third aspect for investors is, as you come back to me, a third aspect is what is going to happen in the local market and our listed equities. Well, very importantly, when you talk about listed equities, what's happening? Those companies that might be borrowing in US dollar terms, their borrowings will go up, corporate earnings may fall. 1. 2, those companies that have high holdings in bonds, insurance companies and so on, that can hold 20% of their assets, pension funds that can hold 20% of their assets in foreign assets will also be hit as interest rates go up and valuations go down. Think about what you need to do, consult your investment advisor, of which Bourse is one, and see what you're going to do going forward. It's a good time to think in those terms. Have yourself a wonderful investment week. This is Subhash Ramkilawan for the Bourse Report.